Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. However, everyone's been doing. Um, is still retreating. I definitely am moving more from a long stance to a short stance. I did short Costco today towards the end of the day, and I've been selling. I've been taking profits on my some of my oil stocks, and that has been Exxon Mobil primarily. So that's kind of the nature of the beast right now. It's a tough market to trade for everyone. But what's really important out there, of course, is that you try to move. The market has moved to an uptrend under pressure, and that means that we want to be. We don't want to be long. We don't want to be more than about 50% long in this market. We want to be either short or or possibly or possibly out of the market. So my it for what it's worth, my advice is that the best place to be right now probably is primarily out of the market, getting ready to set up for some shorts. I still have footprint in the market, of course, but I am looking, of course, always to mitigate anything. And one of the ways to do that, of course, is to go short. Um, so basically, the Dow Jones fell really after a unfortunate jobless claims. They were up. It does look like you know probably coming into the election, we're going to take another leg down. Of course, we were up 75 basis points on the Fed funds rate, and they're running about 5% right now. So this is cutting off a lot of the market for for home builders and some of the automobile manufacturers. So it's probably going to be a little bit of a tough Christmas here. If you want to get the most current list for my ready list, and of course this is probably I have it up here on the screen, and hopefully you can see it. HTTPS://sendfox sendfox.com/LP/1 small case R 7 small case KXZ. And if you do that, you can go ahead and get the ready list. This kind of gives you some stocks that I believe are set up, possibly so if we do move to a confirmed uptrend from an uptrend under pressure, then we want to possibly look at these. But right now, it's sort of just a kind of a wait and see list. And if we do continue to move down to a market and correction, probably I will be coming out with a short list, and this hopefully will allow us to see, where we can go, where we can go for that. So that's kind of the long and the short of it. Let me just show you what I am currently long. Now I have been reducing positions here, so I am long Exxon. I did sell 100 shares of it today. I do have two covered calls that are coming due very soon, so I'm probably going to be out of that by the end of by about November 18th. That's what I'm expecting. AMSL, I'm basically down to, believe it or not, two shares. It was down today again, and I think it's getting some weakness, unfortunately. The XLE was up. I'm still in the XLE. This is the Energy Select Spider that covers the energy sector. This is really the only sector that's been doing well. And then, of course, I am also in BP. BP is moving kind of nice. It's at a buy point right now. So if you did want to be long anything, this is one of the ones I do kind of recommend looking at. Is BP, because it's at a good juncture. It's right in the buy zone and right above the pivot. So that might be of interest to you. Also, as I say, I did go short on Costco. Now I shorted it at 488. It's down to 486 after hours. We'll see what happens with this, but I do think we're going to probably move down just because of the inflationary market that we're in. But who knows? I mean, you can never tell on these things. But that's kind of what that's kind of what it's looking like here. So let's get into some of the questions. Thanks, everybody. By the way, if you're looking on TikTok, super easy to jump on over to the YouTube channel, just go to my link, which is on my bio. Click on that, and you'll be able to see the link directly to the YouTube feed. So let's take a look. Charles first. He's looking at SARK. Of course, this is the anti-ARK, ARK. Uh, AXON, of course, this is the taser people, and then a WTI. So let's look at SARK first. SARK is the symbol for that. And there we go. There's SARK. Let's see if we can put that into perspective. There we go. All right. So SARK, with SARK, we sort of bounced off of the 50-day line. We're above the 200. That's very good. We're also with a 97 relative strength. So that's looking good. It's in the top 3% of all shares. Notice we've had a lot of buying pressure there, which is good. And let's take a look at the checklist on this one just to see. This is a problem for this one. Of course, this is an ETF, not a not a share. So this one does not have a very good checklist. Now, here's what I would say on this one. I think that you have to be a little bit careful because ARK potentially is going to be, we'll see what happens with ARK, but I don't know if this is good enough to buy. I don't think I'm just a little bit squeamish on this one. I think we could get a dead cat bounce here, and of course that would kind of not be a great thing for for ARK. Let's see. So I would say no on SARK. Let's look at AXON. This, of course, is the taser company. Um, and this one, probably will do well because of the concerns with rising, um, with rising crime in this country. So this one probably will do well. But here's the thing: I wouldn't buy it though. I know I'm being negative here, but we're extended. The buy point's right down here at 125.40 here. The buy zone is this blue area, but we're way above the blue area. We're actually in a profit taking area here at about 150. So I think you got to pass on this one just because I think you just have to pass on it based on this chart. I mean, it is moving higher, but remember we're in a very volatile market. We do have earnings coming up closely, so I would say no on this one. Let's look at the checklist to see. Now the checklist isn't bad, 89%, but I would still shy away from this one just because it's way above the buy zone. And in a market like this that is so volatile and it's basically not going anywhere, we have to be very, very careful not to buy extended. And if we bought AXON here, it would be extended. So I think we got to skip this one, unfortunately, and take a look to see if we could find something else. All right, WTI. Let's look at that. Um, I don't think this is West Texas Intermediate. I think this is another company here, W&T Offshore. It has the same, sometimes people will say, oh, what's West Texas Intermediate? But this is an offshore company. So it's a little bit different play. This, of course, depends on federal leasing, and that's an issue. But the one thing I do like about this one is that it is a driller, and I do like the drillers. Let's see if we can come in there. There we go. Okay, I'm trying to grab the. There we go. There's the chart, so I can get to all the controls here. Um, let's see. There we go. Let's move it over here a little bit. Pretty decent checklist, 78% on that. And it has moved up, but it's an $8 stock. It's very volatile. It does have a 99 relative strength, but it's in an area that I do like, and that is, of course, the US E&P. But I just think right now with earnings being so close, I would probably not go for this one either. So I'm 0 for 3. So I'm 0 for 3 on this one. But I probably would not, I would not go for this one either, WTI. So 3 out of 3, not looking as well as I'd like. Okay. Well, I do want to show you a stock that I did short today, and that's Costco. And you say, well, why, Jim, would you short a stock that is so big and so Powerful. Well, that is because the best shorts tend to have been the leaders in the last go round, and that's definitely been the case with Costco. You know, Costco has been a leader in the retail space. It's just my opinion that with the inflation and supply chain issues, not only costs going higher, but uh, incomes are probably going to go lower. So I am not very bullish on the retail sector right now. I'm looking, I think, at a pullback here. What happened is, oh, it's down a little bit more. I did short it at 488. It's now at 485 in the after hour trading. And the reason is that you can see we moved up above that 200-day line. We moved all the way up to a pivot. The pivot being at 568. And then we came all the way back down to 440. So what I'm looking at is I do think that we have gotten a ceiling here, basically at the 200-day moving average, and I think we're going to pull down probably to about the 440 area. So if I can get $40 downward motion out of this, I'll be happy. Now, here's the thing about shorting. If you're buying a stock long, it can double, triple, quadruple. But with a short, it can only go to zero. And I don't think Costco's going to zero anytime soon. But I do think it's going lower. And what we do when we short is we set a stop loss, but it's a very different kind of stop loss. It's a buy stop limit. So what it does is that when you after you have shorted the shares, you then place a buy stop limit order. And that way that works is if the price of the stock comes up to, in this case, the 200-day moving average, then it will initiate a limit order to buy at 10 cents above that. So effectively stopping it out at that point. Now, typically you want to let if you're going long with a stock, you want to let the stock run uh, no more than 8% down from where you bought it. With a short, it's even more intense than that. You only want to let it run up about 5%. So you want to you just want to set your buy stop limits within 5% of where you shorted the stock. So this is the one that I did today. I do think it's deteriorating. The checklist on this one is 5 out of 9. It's still looking fairly good, but I think overall it's likely to see some difficulty. Retail major discount chains, 117 out of 197. So it's a weak sector, and I think it's not a weak stock, but it's I think the sector is probably going to move lower. So that's kind of where I shorted it. Now, hopefully, I'll be able to put out in a day or two, maybe even by tomorrow, a little video of how to short the stock, and I'm going to hopefully putting out there to YouTube and TikTok and everybody that's on that. So hopefully they can see. Hopefully they can see it. But again, just to reiterate, the stock moved up to the 200-day moving line, pulled back, and then I shorted it at 488. In the after hours, it's at 485. So hopefully, at least for me, it's moving lower, and that hopefully will make a difference. Thank you very much. All right, let's take the next question. Thank you so much. Let's look at BP and LNG. Now, I'm long BP. Let's look at that one first because I do think that if you're looking for a stock long at this point, this is probably one of the best setups right now that I've been able to find, and that is for BP. And of course, it's one of the large integrated. It's one of one of the large integrated companies, and so it's I think it does have the earning stability and the size right now in this market. Um, it's the large stocks that seem to be the ones that are holding best. We were up today to $33. We pulled back a tiny bit after hours. We pulled back 6 cents after hours, but we're right at the pivot. The pivot is 32.68. This is where I bought, and I did this on the first through 2 days ago. I bought at 33.38. So I'm a little bit down here, not too much, about 33 cents. But I'm still pretty confident in this one. We have a 89 relative strength. The only thing we really are lacking on is the EPS greater than or equal to 80 on that. So on the technicals, we're still not extended on this one. At the 32-day line, we're only up about we're only up about 3% here, a little bit over 3%. So that says that it is buyable at this level. When in a market, not only do we want to buy in the buy zone around the pivot, but we want to buy very close relatively to the 21-day line. And currently, we don't want to buy any more than 5% above or below that. Right now, we're just about 4% above that. So that's a good place for it to buy. So I definitely think that if you want to go in with a position long, this one might work for you. And I think it might work for you, Sarah. LNG is also another story here. I'm not in LNG currently, but I am looking at it because it also is set up well, and it has gone through earnings. So that's a key here. This is LNG here. We were in a buy zone. We pulled back. We pulled back after hours quite a ways. We went really from um, 170 177 here all the way down, basically to the 21-day line. Now let's look at how close to the 21-day line we are. That's a key level. Yeah, and we're 2% above. We're 2.5% above the 21-day line. Um, this is actionable here, but I would be careful. As you can see, what's happening is it's with LNG. It's coming up to this resistance, that being the pivot at about 178.62, and then it's pulling back. So if it reverses tomorrow, then you could buy it. I wouldn't buy it unless it reverses higher, though. So that's my take on LNG here. All right, let's see. Uh, Thoughts on and AMD. Well, here's the problem with both on and AMD. Of course, they're both semiconductor stocks, as everyone knows. On semiconductor, probably the better of the two right now, but the numbers just haven't been. The market has been pulling back, and even with the strength in on semiconductor, this has not been an area of as much strength as I would like to see. Now, here's the thing with on semiconductor. At this point, I would not be a buyer of it. As you can see, it's dropped below the 200-day moving average. We typically don't want to be long if the stock is below the 200-day moving average. Now, it just pulled down below that today, and it looks like it's moved right back up to 60, which is sort of where the 200-day moving average is. Really not a good place to buy. The relative strength is 73. So I think at this point we're in a downward trend on semiconductor. And again, I have owned this one. I like this stock, but it's just not the time to buy it. We're in a downward trend on semiconductor unless we route higher, unless we make a move here. I don't think you could buy it. So I would not be in on semiconductor at this point. And if you're down more than 7%, of course, you want to trim your position and possibly move out of the stock, because that could be a problem. That could be a problem going forward. You always want to, and this is right now a game of limiting your losses. It's the hard penny market, as Mark McAvenny would say. Not an easy market to trade, but I don't think you can buy on semi at this point. So let's look at AMD, and that was the other one that we wanted to see there. So let's look at AMD. With AMD, yeah, unfortunately with AMD, we have the similar problem that we've been having, with most of all the semis really. Intel reported that they're probably gonna they're probably gonna have a bad next year too. I've been trimming my AMSL. I'm down to 2 shares, believe it or not. Even though I love the sector, I just don't think you can buy it right now. Currently, the relative strength for AMD is 11, so that means that 89% of all the market is better than this. I just don't think you could be in it at this point. We're below the 200, we're below the 50, we're below the 21, and we're basically right at the 10-day line. So I just don't think we can get involved with with AMD right now. I just don't think it's a place in the market that we can do anything on. Let's look at for Bomadoc. All right, for Bomadoc, he is asking about the ETF strategy. And the way this thing works is the ETF strategy, and if you look at the thumbnail on if you look at the thumbnail on the title card for this show, the live shows every day, I put a little mark there, and hopefully you can see this. So let's go and take a look at that really quick. Here it is. There's a little yellow circle here. I'll make sure that everybody can see this from TikTok as well. Um, there's a little yellow circle that's right here, and this little yellow circle indicates that we are in a market that is in correction. Now, there's three modes of this. If it's a green circle, that means we're in a market that's in a confirmed uptrend. We want to be 100% in an index ETF like the Spider, like the QQQ. At this point probably or the Diamond, the DIA. Recommend at this point probably either the Diamond or the Spider. I think the QQQ is a little bit tough especially in this market. So because of that, we are in a market that's under pressure. In a market under pressure, what we do is we sell half of the holding. So if we have 100 shares of the Spider, we sell 50 of them. We keep 50 in cash, 50 in the index fund. If we go all the way down, if we go to a market in correction, we sell everything. We just wait in cash until we get another uptrend. So that's sort of how the Christine wants to take a look at the Tesla. So let's move over there to Tesla and see what we can find. I have not shorted Tesla. I'm a little bit afraid to short Tesla, just because I think that it could backfire on me. So I'm really stayed out of shorting Tesla. But if we look at the chart for Tesla, we can see again that we're down. What happened is it moved right up to that 21-day line. Oops. It moved right up to the 21-day line, and then it was and then it moved against us here. So it went down, came up a little bit, but still really we're in a downward trend for Tesla. So if I would not buy Tesla long here. I did do a short, a very very brief short there, but I because I was wrong. I do think that we're coming down probably another 15 points. I think really the support is really at about 200. So you potentially probably could short it here. I think it is coming back down to 200. I personally am not. Just a tough stock to trade. I probably would not be in it short. All right. Thank you for that question. Tech stocks are going down in this dip. Yes, they are absolutely. They absolutely are. Let's take a look at the. Here's something that I can. Let's move over to the QQQ, and I want to demonstrate this. You're absolutely right with that observation. Tech stocks are moving lower, and where we can see this writ large, of course, is in the is in the QQQ. Um, this is the ETF that covers the 100 largest stocks in the Nasdaq, and this is where Microsoft is, Meta, etc. And as you can see, really since about December here, we've just been in this downward trend. And notice also, and notice also that there we go. Let's see if I can get my see if I can get my cursor up here. No, sometimes it let me doesn't. Sometimes it doesn't. There we go. All right. So what's happened is this is the 200-day moving this is the 200-day moving average. Oh, there we go. This is the 200-day moving average here. This black line, as you can see, it bounced off of it once. See, it's in a downward trend. The Qs are in a downward trend. So we bounced off it once. We came all the way down, and then we came right back up here. We bounced off it again, and now we're instead of getting resistance at the 200-day line, we're getting it at the 50-day line. It's bounced there. So I'm afraid probably going to see the Qs move lower. That means basically it's a good time not to be intact because tech is probably going to move lower. So I suspect this time we're probably going to go below 250 on the QQQ. So that's my take on it. So I would be very, very careful. Very, very careful. And Apple is tanking. Yeah, okay. Apple was sort of the last of the bellwether tech stocks, and that's been an issue, of course. As as the oils have been in the ascendancy, the techs have not, and that's definitely the case here. In the after hours, we had a little bit of a bounce, but it doesn't. Let's look at the 10-minute chart. See how Apple traded today. Yeah, it's definitely starting to move. Wait a minute, that's the wrong one. No, no wonder. Okay, didn't get it right. AAPL. There we go. Apple. There we go. Yeah, definitely looks suspect there, that chart. So there we go. Yeah. Okay. So we had a big sell. We had a we had a big sell at the end of the day. 139. Bring it over there. Yeah. 139. And it's probably it looks like it was fighting it out, and it looks like you're right. I think it is going lower. So I think, with this stagflation, with this higher interest rates, the market is rolling over, and eventually it'll get everything. But really, the only real strength in the market currently is the oils. Again, I am long BP and I'm long Exxon, but I've been taking profits in Exxon, and I just opened a short on Costco. So that's kind of been my take on this market. It's just it's been oops. It's the kind of market that it's starting to turn, and I do think that unfortunately we're likely to see another leg down. So, uh, Francis, thank you. Finance Fund, TALO. Let's look at TALO really quick here. Talos Energy, definitely like the area that it's in. Of course, um, relatively inexpensive stock here. Um, it looks like it bounced. Yeah, and then it collapsed through the 50-day line, which is at 20. 97 relative strength, but a lot of selling coming in. One of the key reasons you don't want to hold a stock after earnings. You want to hold it into earnings, but if you're not up at least 10%, you want to sell it, and that's definitely been the case here. There's a lot of selling on the news. Now, I expect this will return to positive tomorrow, but at least for right now, people held it. This is why if you're up less than 10% in a stock coming into earnings, it's a good idea to sell it and then wait. And you can always buy it back. But remember, if you have profits, you want to take them relatively quickly. So, Mark, let's see what he's saying. Amazon and Meta, you explained Tesla and thanks. Let's look at Amazon. Amazon, the weakness in Amazon is part of the reason I'm shorting. Um, is part of the reason I'm shorting um, Costco, and the reason is because I do think that we're going to see some more damage in this area. Here's the chart, and this is let me see if I can show it if I'm looking at the right one. There we go. So let's put that up there. So in this chart with Amazon, what's happened is, and this is why I short as it comes up to that. Oops, as it comes up to that 50-day line. That's where I like to start to see a short, okay? Because it came up to that 50-day line and then boom, it came down and it's continuing to move down. This is Amazon. This is the Amazon stock. Look at all that selling going on there. Look at all that selling coming in to that issue. So that is not looking good. I want to compare these 2 stocks. Now, I'm not short Amazon right now, but it was part of the one that keyed me off about Costco because I think they're similar in some ways. This is and I'm showing it on the for TikTok. But let me get it up for everybody else on on This is the comparison between Costco and Amazon. As you can see, they're both in a downward trend. All right. Amazon's a little bit more of a downward trend than Costco. Costco rallied, and then what I did is when it rallied, that's where I looked to short it. I shorted it basically today, right about there. So as you can see, this is rallied, but I do think that they're very similar in that both of the retailers are going to see lower prices coming forward. So my thing about Amazon is that you know, I'm a little afraid to short Amazon just because of the way it's held. But this is one of the reasons why I shorted Costco today. As you can see, that 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 sort of thing happened. So yeah, let's check and see kind of what's going on with the big Costco chart. So here with the Costco chart, I'm sorry, with the Amazon chart, excuse me. We are in this downward trend. Let's look at the checklist on this one here. The checklist is terrible for Amazon. It's only 3 out of 9, okay? Look at the technicals. They're all red. They're all red. So not only are we're below the 200-day line, but we're below the 50, 21, and 10-day line. So this is and we're seeing increasing indication that people are selling here. So here's the thing. I'm looking at this also as a potential short. I have not shorted Amazon here, and I don't know how low it could go, but I want to take a look at the monthly chart to kind of get an idea. As you can see, up until really very recently, and this goes all the way back here to 2008. In 2008, this is the last really big downturn that we had in the market. Was it well, obviously the COVID one, but this is the big one in 2008. So let me shift that over here. In 2008, the Amazon went below the 30-week moving average. Okay, and then it just touched it in 2014. That was the last really bad one. And then if we go forward to the COVID, that's where it touched it. But you see, it hasn't gone below it. Well, guess what? Amazon is now below that 30-day moving average for the first time since 2008. So my guess is this is going to go lower. Now the question is, how much lower is it going to go? I don't know, but I definitely think it's going to go lower, and I think it could go, to maybe even $50. I'm not really shorting it here, just because there's not a lot of meat left on the bone. There's a lot of reasons, but it's just not a good time to be in Amazon right now. It really isn't. The situation just is not positive for it. All right, we'll probably take the last question here from Mark. Oh, hey, thank you, man. I appreciate that very much, Mark. Really appreciate it. All right, PR from Charles. This is probably the last one for the day, just because that's kind of where we're at. All right, PR. Permian Resources. I'm already liking it. Um, you know it. This is the kind of chart you want to buy. I mean, now we can't buy this chart because it's extended. But look at this, it's moving up. So I very much appreciate you bringing this up. You notice how when we were looking at the Amazon chart, it was pointed downwards. We never want to buy a downward facing chart. We only want to buy ones that either have reversed and are reversing higher or have moved higher. This has definitely moved higher. Here's the problem with buying this one. Unfortunately, the pivot is basically back here at 887. We're now at $10. We're just too far extended above the pivot point there. Let's just take a look at, let's see also, and we are too far above the 10-day line too. So beautiful stock, but just not one that you could buy. It's extended. And in this kind of market, you just can't buy extended. Yeah, it's trouble, but you can't buy extended. Um, there you go. All right. Oh, one last one for Charles. He's looking, well, let's look at Murphy MUR. Let's look at MUR. That's probably the last stock. MUR. I could go to this all night. But MUR, Murphy Oil, definitely like this company. Okay, this might be giving us an opportunity. Now, here's the thing. We don't want to buy this one because it did pull back. And again, this is such another situation where earnings. So if you're up into earnings, sell and then wait. See, if you did that, you would have gone all the way up here. You would have been selling right there, which would have been excellent. And then it pulls back. And if this thing reverses and it bounces off the 50-day line, which I expect it will, and that's basically the pivot as well, then this one might be a buy as well. 98 relative strength. Good stock, just, again, you don't want to hold them through earnings in this kind of market because they typically will collapse. So, very, very good. Well, thank you, everybody. Thanks for sticking with me here on this show. And let's just wanted to also, of course, for everybody, wants to ask you again, as I always do, please like the show, and it gets it out there to a lot of people for us. And also subscribe if you're not already a subscriber on YouTube. That would be fantastic if you could subscribe to the show. So hit that like button, and also, um, you know, it's great. Also, if you want to sign up for the action trailer, it's super easy. Just go to www Dallas Trading Floor. And I'll be back with you tomorrow at 5. By the way, next week I'm going to be in Mexico. I'm going to be in Mexico City. And I don't know what my broadcast schedule will be from there, but I'll be there basically from Tuesday of next week until Wednesday of the week. So I may be spotty this next week because I will be traveling in Mexico. So thanks, everybody. Happy trading.